The global trade landscape has been far from calm in recent years. The United States and China, two economic titans, have been locked in a bitter trade war. Tit-for-tat tariffs have become the norm, creating uncertainty for businesses and investors worldwide. In this charged atmosphere, the aviation industry finds itself at the center of a new storm. Tensions escalated further in early 2025. The United States imposed a fresh round of tariffs on Chinese imports, targeting key sectors, including electronics and telecommunications. China responded swiftly and decisively, announcing a ban on imports of Boeing aircraft, a major blow to the American aviation giant. This ban is a significant escalation in the ongoing trade war, highlighting the growing willingness of both countries to utilize targeted economic measures. The aviation sector, with its intricate global supply chains and high-value contracts, has become a pawn in a much larger geopolitical chess match. China's decision to ban Boeing aircraft imports is a direct response to the United States tariffs. It is a calculated move aimed at applying pressure on a key American industry. The ban has sent shockwaves through the aviation world, with far-reaching implications for Boeing, its vast network of suppliers, and the global aerospace industry as a whole. The ban affects a significant portion of Boeing's order book. Chinese airlines are major customers for the American manufacturer, having placed substantial orders for various Boeing aircraft models, including the popular 737 MAX and the long-haul 787 Dreamliner. These orders, now in jeopardy, represent billions of dollars in potential revenue for Boeing. The ban introduces a high degree of uncertainty into Boeing's production plans. The company relies heavily on the Chinese market to sustain its production rates. The loss of such a significant customer base could force Boeing to make difficult decisions regarding production cuts and potential job losses. This situation underscores the vulnerability of globalized industries to geopolitical tensions and trade disputes. The immediate impact of China's Boeing ban is most acutely felt by Chinese airlines. These carriers, already grappling with the aftermath of the COVID-19 pandemic, now face a new set of challenges. The ban disrupts their fleet expansion plans and limits their options for acquiring new aircraft. Chinese airlines, including Air China, China Southern and China Eastern, are major players in the global aviation market. They operate extensive domestic and international networks, connecting China to the rest of the world. The ban on Boeing aircraft restricts their ability to meet growing travel demand and maintain their competitive edge. In the short term, Chinese airlines may seek to mitigate the impact of the ban by exploring alternative aircraft options. This could involve accelerating orders for Airbus aircraft, Boeing's European rival. However, Airbus itself is facing production constraints and may not be able to fully meet the surge in demand from Chinese carriers. This situation leaves Chinese airlines in a precarious position, forced to navigate a turbulent and uncertain market. Boeing's turbulent descent market reactions and supply chain chaos. News of China's Boeing ban sent shockwaves through global financial markets. Boeing's stock price plummeted as investors reacted to the news of a major market being effectively closed off. The ban compounded existing concerns about the company's financial health in the wake of the 737 MAX crisis and the pandemic's impact on air travel. The ban has also exposed the fragility of global supply chains. Boeing relies on a vast network of suppliers worldwide, many of whom have operations in China. The ban disrupts this intricate web of relationships, creating uncertainty and potential bottlenecks in the production process. The ripple effects of the ban extend far beyond Boeing itself. Numerous smaller suppliers, many of whom are heavily reliant on Boeing contracts, face a domino effect of order cancellations and production cuts. This situation highlights the interconnectedness of the global economy and the potential for localized disruptions to have widespread consequences. Airbus and COMAC, seizing the advantage. While Boeing grapples with the fallout from China's ban, its competitors are presented with a unique opportunity. Airbus, Boeing's European arch-rival, stands to gain the most from China's decision. Chinese airlines, now unable to purchase Boeing aircraft, are likely to turn to Airbus as a viable alternative. Airbus offers a range of aircraft models that directly compete with Boeing's offerings. The A320neo family, for example, competes head-to-head with Boeing's 737 MAX in the single-aisle market. Similarly, the A350 and A330neo wide-body aircraft challenge Boeing's 787 and 777 models. China's own domestic aircraft manufacturer COMAC also stands to benefit from the ban. COMAC is developing a range of commercial aircraft, including the C919 narrow-body jet, positioned as a competitor to the Boeing 737 and Airbus A320 families. The ban could create an opening for COMAC to secure a greater share of the Chinese market and gain valuable experience in commercial aircraft production. Shifting sands, global trade alliances in flux. The Boeing ban underscores the broader geopolitical shifts underway in the global economy. The trade war between the US and China is accelerating a trend towards decoupling and the formation of new trade alliances. Countries are re-evaluating their economic partnerships and seeking to reduce their reliance on traditional trading partners. The ban highlights the growing importance of regional trade blocs. Agreements like the Regional Comprehensive Economic Partnership, or RCEP, in Asia and the United States-Mexico-Canada Agreement, or USMCA, are gaining prominence. These blocs represent a move towards regionalization in trade and could reshape global trade patterns. The trade war's escalation has implications for the U.S. trade deficit. While the ban on Boeing aircraft might seem like a win for American manufacturing on the surface, it could ultimately exacerbate the trade imbalance. China could choose to source goods and services from other countries, further reducing American exports and potentially leading to job losses in various sectors. The long runway ahead, charting the future of aviation. The long-term impact of China's Boeing ban on the aviation industry remains to be seen. The ban introduces a significant element of uncertainty into the market, with potential consequences for aircraft manufacturers, airlines, and the broader aerospace ecosystem. The situation underscores the vulnerability of globalized industries to geopolitical tensions and trade disputes. The ban could accelerate a trend towards regionalization in the aviation industry. As trade tensions persist, airlines may prioritize sourcing aircraft from manufacturers within their respective regions, leading to a more fragmented global market. This could result in less competition and potentially higher aircraft prices for airlines and passengers alike. The ban also highlights the importance of innovation and adaptability in the face of disruption. Boeing, faced with the loss of a major market, will need to innovate to remain competitive. Similarly, Airbus and other aircraft manufacturers must adapt to the evolving geopolitical landscape and navigate the challenges and opportunities it presents. The aviation industry is entering a new era defined by uncertainty and transformation. How it adapts to these shifting dynamics will shape its future for years to come.